Welcome back to our multifamily rental investment series. If you haven't seen our previous videos, please go back and see them. We're building a full package of things you need to know before you make an investment in a multifamily rental. Today's topic is the market. When we talk about the market for a multifamily rental, we're looking at your neighborhood, we're looking at your city, we're looking at the amenities of your property, but we're also looking at your neighborhood itself. Things like the schools, the churches, fire stations, grocery stores, shopping malls, restaurants, things that are walkable, parking, all the things that make up a nice neighborhood. They all have some sort of impact on the rent. And this is why, when you look at a property, and you have to follow the three rules of real estate. More valuable properties are always based on the same thing: location, location, location. You're probably going to likely try and find a property, the best neighborhood for the value of what you can invest in. So let's just say you found a nice property in a neighborhood you like. You need to now go evaluate what do I think the rent is worth. There's several sources you need to check, but we always recommend start on your own. Pretend you want to rent whatever it is you're offering. If you have, a bunch of one bedrooms with a den, with in-suite laundry, utilities extra, go on rent.ca, go to the newspaper, go wherever you would like to go to find to rent this building, and try to find comparable rents for the product that you're offering in that exact neighborhood. Start with that. Once you've done that, then you should do some other double checks. There's lots of resources with each of the major realtors that you can go to check rent. You can also go to Canada Mortgage and Housing Corporation. They do a rental market survey. Guaranteed, though, the rental market survey is going to be lower than likely lower than the rent that you're looking at. That's okay. That's how it normally is. If you haven't looked at a CMHC rental market survey, look at it. The other sources you need to contact. You're going to need, if you're actually serious about buying this property or renovating the property or rebuilding a property, you're still going to need an appraiser because you still need to validate your income. So you should find an appraiser. Start asking them about what you think the rent should be for this area. If you're going to use them as an appraiser, they're going to have to do this research anyway. So it's not a waste of time. Another amazing source is the realtor. You're likely buying it from a realtor. So that same realtor or other realtors that you're planning to engage, they should have the information you're looking for. So these are sources you need to do on your own. Once you're there with your rent, this is where you start your whole analysis. And we talked about this before in evaluation. Rent is the most important part because it forms your income. The other thing you need to look at for the area is the vacancies. If this is a good neighborhood, it likely has a very, very low vacancy rate. Or if it's a medium neighborhood, or if it's a neighborhood in transition, and those are good buys, and you're saying, okay, I'm going to buy it, and the rent will go up over time because this neighborhood's transitioning. This is all important stuff, but you need to also factor in whatever the vacancy rate. And vacancy rate is on the total income. So you can have a rent of your unit, but you also have things like if you're charging extra for laundry, if you're charging extra for parking or locker space or whatever it might be, that also factors into your vacancy rate because if you have somebody who's not using the unit, then they're not renting that space from you either. So you need to factor that in. And that's also part of that whole market thing, as we discussed. But you need to look at this. You need to go do the research yourself. This is heavy lifting, very important thing for you to do.